What do you want this place to be? I want it to be number one, not just in the region, but in the world. Hello, everyone. Dubai's real estate market is considered a goldmine investment by celebrities, actors, and CEOs worldwide. Dubai's property market is thriving. It has become the world capital of luxury housing. In Dubai, there's no tax, and they simply have so much money. The market continues to see record high prices. Dubai's property market is defying trends with the highest rate per square foot ever recorded. They've been selling property with record numbers of sales. Buyers are paying anywhere from 10 to hundreds of millions of dollars, breaking sales records month after month. The city is now a global business hub and luxury tourist destination. Dubai market rates are growing so rapidly that if you have 1 crore rupees to invest, you could buy property in Mumbai, Delhi, or Dubai. But fast forward 10 years, where do you think your money will grow the most? Consider this. While in Mumbai, your investment might grow to 1.5 crores at an annual growth rate of 5%. In Delhi, it would appreciate to 1.4 crores, but in Dubai, it could shoot up to 2.5 crore rupees. Now let's discuss rental income, which is even more interesting. If you buy a flat in these 3 cities for 1 crore rupees, in Mumbai, you'll get rent of 40,000 per month. In Delhi, it would be 35,000 rupees monthly. Whereas in Dubai, you'll get rents between 70,000 to 120,000 rupees per month. And here's the best part. While Mumbai and Delhi will tax your rental income at 20 to 30%, in Dubai, you keep 100% of your profits. 0 tax on rental income, 0 tax on capital gains, and 0 property tax. If you talk to any agent in Dubai, they'll tell you this is why India's richest people, from Shah Rukh Khan to Virat Kohli, from Mukesh Ambani to Gautam Adani, are all pouring money into Dubai properties. Mukesh Ambani, Asia's richest person, spent a combined $238 million on 2 villas on Palm Jumeirah. Dubai is emerging as a favorite market for the ultra-rich. British footballer David Beckham with his wife Victoria and Bollywood megastar Shah Rukh Khan will be some of Ambani's new neighbours. Agents will also tell you that compared to Mumbai or Delhi, where you'll struggle to find a 2-bedroom apartment for under 2 crore rupees in a decent location, and in Delhi, even after spending crores, you'll end up in a congested colony with traffic jams and power cuts. In Dubai, for the same price, you'll get a luxury apartment with world-class infrastructure, high-speed roads, no pollution, and most importantly, no property tax. Sounds amazing, right? But do you know what they don't tell you? They don't mention Dubai also has hidden pitfalls, tax traps, oversupply risks, and the biggest danger of all, Dubai's economy will crash if recession hits the United States. So in today's episode, we'll do a deep dive to understand, is Dubai's real estate really booming, or is it a bubble waiting to crash? Why are celebrities, billionaires, and actors so obsessed with owning houses in Dubai? And most importantly, what are the hidden traps for an Indian investor in Dubai's real estate market? Before we continue, let me introduce our sponsor for today's episode, Liquid Black. Managing money can be very scary with so many investment options, confusing tax rules, and unpredictable markets. Most people don't know where to start. So even if you're earning well, if you end up overpaying taxes or making random investments, you could be losing lakhs in potential savings without realizing it. That's where Liquid Black comes in. Their AI-powered wealth partner helps you optimize taxes, invest smarter, and protect your wealth from market volatility with personalized profiling. They create a plan tailored to your needs by analyzing your assets, liabilities, and financial goals. Their precise portfolio assessment ensures your investments are continuously adjusted, making sure your money performs efficiently in any market condition. With 75+ years of expertise, they optimize your portfolio for long-term growth and tax-smart stability. The best part is it's very simple to use. They start with a quick consultation, followed by building a customized financial blueprint and executing a tax-efficient plan that evolves with your goals. If you want to build wealth smartly, sign up for Liquid Black today and take full control of your finances. You can get started from the link in the description. Now back to our episode. To truly understand why Dubai's real estate market is making millionaires overnight, we need to break it down into 5 core fundamentals. These are the secret ingredients that make any real estate market boom or crash. Each of these pillars will determine whether your investment will skyrocket or crash into the ground. Let's start with the most exciting factor: capital appreciation. This figure will tell you, if you invest in Dubai, will your money double, triple, or completely disappear? Let's say you bought a $1 million property in Dubai, London, New York, and Mumbai. On average, this is how much your investment would grow annually. In London, appreciation of 4% in New York, appreciation of 6% in Mumbai, appreciation of 4 to 5%. But in Dubai, a staggering 5 to 8% per year. This means if you had bought a prime apartment in downtown Dubai for $1 million in 2015, today it would be worth $2 million. So your money would practically double without paying a single dollar in capital gains tax. Now, let's compare this to London, where you would have to pay 20% in capital gains tax. The same goes for India, which has a 20% tax on indexation benefits, and the US also has a 20% tax on these benefits. In short, Dubai beats every major real estate market when it comes to capital appreciation. But hold on, that's just the first pillar. The real game changer is rental yields, where your passive income goldmine comes in. If you bought an apartment in Dubai, London, New York, Bangalore, and Mumbai, how much money could you actually make in rent every year? Let's break down the rental income for a $1 million property in different cities. Mumbai, while London and New York will charge you anywhere between 20 to 45% in tax, in Dubai you keep 100% of your earnings because rental income tax in Dubai is 0%. This is why investors are flooding into Dubai. Dubai's property market is currently booming. Europeans are flocking to the Emirates, buying up luxurious properties, luxury villas, infinity pools, private cinemas for the world's uber-rich. They're heading to Dubai to invest in a post-pandemic future. Investors include billionaires from Russia, crypto winners, and wealthy Indians and Asians looking for second homes. But wait before you start throwing your money into Dubai's real estate. There is one major risk that could change everything. This major risk asks a very scary question. What if Dubai's supply outpaces demand? Could the market collapse overnight? Well, it can. Let's break it down. Here's the brutal truth. Most real estate markets don't crash because of a bad economy. They crash when developers get greedy. They build too many properties, and suddenly the market has more properties than anyone can buy. This is where the nightmare begins, and the market starts crashing. Suddenly, supply floods the market, prices collapse, and investors lose millions overnight. This is exactly what happened in China, where they built entire ghost cities that no one lives in. Over the past 2 years, dozens of Chinese real estate developers have fallen into financial distress. China's real estate sector grew on the back of large loans, but now there's an oversupply, more homes than buyers. It happened in the US during the housing crash of 2008, where an oversupply of homes led to a 29% price decline. Eventually, this crash was so bad that it took another 5 to 6 years just to recover to the original pre-2008 cost. So, is Dubai making the same mistake? Let's analyze the most critical indicators that tell us whether Dubai is a gold mine or a landmine. The first indicator is population growth versus new residential units. The golden rule of real estate is simple. If more people are moving in than there are houses available, prices rise. If developers build too many houses, prices collapse. That's why it's important to measure residents per unit built. If this number is above 2, it means demand is healthy, but if it goes below 2, it indicates weaker demand. Look at this. Dubai's residents per unit is 2.72, London's is 2.3, New York's is 2.55, and Mumbai's is 4.55. This means Dubai's population boom is outpacing new housing, which suggests prices are rising sustainably. For Mumbai, this indicator shows too many people and very little housing available, which is why the rental market in Mumbai is booming. But is it that simple? We need to dig deeper. This is where we look at the second factor, housing absorption rate. This is measured by the number of units sold divided by total units available, multiplied by 100. This metric tells us how quickly new apartments are bought or rented in Dubai and helps us understand whether apartments in Dubai are flying off the market or sitting empty, potentially heading toward a crash. If there are 100 units available and 80 are sold, the absorption rate is 80/100 x 100 = 80%. Here's how Dubai compares to other cities. New York, 82%. Mumbai, 83%. Dubai, 89%. What's even more shocking is that luxury properties in Dubai have a 95% absorption rate, which means many homes are sold out even before they're built. But before you get too excited, let's talk about the biggest risk factor, affordability. For this, we need to look at something called the price-to-income ratio, PIR. This is measured by the median home price divided by median household income. If this number is below 4, it's great and affordable for locals. If it's between 4 to 6, it's somewhat affordable. If it's above 6, it means homes are expensive and only the upper class may be able to afford them. If it's anything above 10, it means homes are only meant for high-income earners. Looking at this chart, the PIR for Dubai is 6.7, which means homes in Dubai are only meant for medium and high-income earners. Compare this to New York at 14.6 and London at 19.5, which means housing is extremely expensive in those cities. You'll be shocked to know that in Mumbai it's 30+, meaning housing in Mumbai is completely unaffordable for the common person. Mumbai is home to several millionaires and, not surprisingly, is one of India's most expensive markets for luxury real estate. Having even a small house or some land in most parts of Mumbai would cost you crores. This is why most cities, including Mumbai, have a huge affordability crisis where locals simply can't afford to buy homes. If property prices grow faster than incomes, it means the market is overvalued and could collapse any time. Again, this suggests Dubai is a jackpot. But here's the wildest part. Dubai has a rental yield versus mortgage ratio that flips the game upside down and makes investors go absolutely crazy. Why? Because in most cities, if you buy a house with a mortgage, your rental income barely covers your EMI, equated monthly installment. But in Dubai, your rent could completely pay off your loan, which means after your down payment, your house is practically free. In Mumbai, London and New York, the EMI rates are higher than the rental yields, meaning most property investors lose money and have to use their own money to pay the complete EMI. But in Dubai, the rental yield exceeds mortgage rates, which means you can practically pay your EMI with the rent from your own property. This is one of the biggest reasons why Dubai's market is exploding. In fact, you can actually make a profit from the rent after paying the EMI. But here's the catch. Even the strongest real estate market has cracks, and Dubai has some serious dangers that most investors completely overlook. People, if you've stuck with me until this point in the video, you've been seeing some mind-blowing growth in Dubai's real estate market. But here's the biggest myth of all. Most people believe that only ultra-rich investors can make money in Dubai. Guess what? That's completely wrong. I did some digging, and what I found is absolutely crazy. In fact, my research says that the less you invest, the more money you make. How on earth is that possible? Let's break it down. Dubai's real estate market isn't a single market. It's divided into 5 distinct categories based on price, location, and returns. Surprisingly, the numbers will tell you that it's not the ultra-luxury segment that makes the most money. First, we have the ultra-luxury category, the playground of billionaires and ultra-high net worth individuals. You can find these properties in areas like Palm Jumeirah, Emirates Hills, and downtown Dubai. These properties start at $2 million and could go into hundreds of millions of dollars. The beauty with these ultra-luxury properties is that some have appreciated by almost 147%, but their rental income is the lowest at 5 to 7%, the lowest in Dubai. So why do people buy them? These aren't properties bought by people like you and me. They're bought by billionaires who don't buy for rental income, but for status. If you're looking for passive income, this isn't your game. Next, we have the high-end luxury market where properties sell for between $800,000 and $2.7 million. This is where high-income investors step in. Unlike ultra-luxury, rental yields here are higher at around 6 to 8%. This is the middle ground between ultra-luxury and high-yield cash flow investments. Then we move to mid-range properties, between $300,000 and $800,000. This is where things get interesting. If you want the best balance of growth and rental returns, mid-range properties are where you should be looking. These properties are located in JVC, Dubai Hills, Town Square, and Dubai Creek Harbour, some of the fastest-growing areas in Dubai. If you want strong capital appreciation and high rental cash flow, this is the safest bet in the Dubai market. These units are found in International City, Dubai South and Dubai Land, making up one of the easiest ways to enter the market. What makes them absolutely crazy is their rental yields go up to 8 to 9%. If your goal is steady passive income, this is where you must play. Lastly, we have worker and low-income housing. Surprisingly, this is where you find the highest rental yields in Dubai. If you want pure rental income, worker and low-income housing in Jebel Ali and Al Quoz can generate over 10% rental yield, almost the highest you can find in Dubai. Why? Because these properties are always in high demand due to worker inflow, and these units are never empty. But here's the disclaimer. This segment isn't for everyone. Managing worker housing comes with challenges, and appreciation is lower. But if you want guaranteed rental cash flow, this segment is where the gold is. So in short, if you're looking for capital appreciation, stick to ultra-luxury or high-end properties. If you want cash flow, mid-range and affordable housing offer the best ROI. Most importantly, remember that as a first-time investor, you don't need millions of dollars, you just need the right strategy. By now, you've seen the jaw-dropping numbers. Dubai's real estate market is skyrocketing, rental yields are outrageous, and there's literally no tax on your profits. This sounds like a once-in-a-lifetime opportunity, right? This is what Dubai real estate agents will tell you. But here's the truth. Nothing in real estate comes without risk, and Dubai has some serious pitfalls that could turn your dream investment into a financial nightmare. So pay very close attention. Let's break down the biggest hidden dangers of investing in Dubai. First, there's the loan and payment roadblock. Did you know that unlike in India or the US, where you can easily get a home loan, Dubai has strict foreign investment rules? If you're an Indian investor looking to buy a 3.7 crore apartment in downtown Dubai, guess what? You can't get a mortgage. Why? Because under India's Foreign Exchange Management Act, Indians cannot take out a home loan for Dubai property. So either you pay the full amount up front, or as a foreigner, you might need to get a loan from a UAE bank itself, and you have to lock up a huge chunk of your savings in just one property. Even if you somehow arrange a private loan, there's another massive risk. Dubai's property market is tied to the US economy. While Dubai may look like an independent economic giant, in reality, its economy is closely tied to the US because the dirham is pegged to the US dollar. If you remember in 2008, when the US housing market collapsed, Dubai's real estate market also crashed by 50% in a single year, and it took another 4 years to recover. This point is more important today because the United States is facing record high debt, rising interest rates, and possibly a recession. If the US economy slows down, global investors will pull their money out of higher-risk markets like Dubai, which could lead to falling property prices and shrinking rental yields. This is exactly what happened in 2008-2009. At that time, developments ground to a halt, and property prices collapsed by as much as 60%. The leadership of neighboring Abu Dhabi, the UAE's capital, announced a $10 billion rescue package for struggling Dubai. So while Dubai's real estate is booming right now, history shows it's not crash-proof. If the US economy sneezes, Dubai might catch a serious cold. If this is clear, let's move on to the next problem. Taxes. If you talk to any real estate agent in Dubai, they'll all tell you the same thing. Brother, Dubai has zero tax. Here's what they won't tell you. If you're an Indian investor, you still have to pay tax on your Dubai property in India. Any rent you earn in Dubai must be declared in India and is taxed at your income slab, anywhere between 5 to 30%. If you sell your Dubai apartment for a profit, India's capital gains tax applies to your Dubai property, just like any other foreign asset. If you don't report your Dubai real estate income, you could face serious legal problems. So while Dubai itself won't tax you, your home country still will. If you don't handle the paperwork right, you could end up in serious legal trouble. This is why you need to understand that a bad investment in Dubai is just as dangerous as a bad investment anywhere else. Lastly, you have to be careful with the bubble trap. Dubai looks like it's on an unstoppable winning streak. But remember, every real estate market eventually corrects. So the million-dollar question is, will Dubai crash again like in 2008-09? Here's what you need to know on the positive side. Rental demand is strong, and absorption rates are still high. The government has put new regulations in place to prevent oversupply foreign investment is flooding in, especially from Russians, Europeans, and Indians, but the red flags include if the US enters a recession, investor confidence could collapse. Ties to the US economy could crash Dubai's market quickly. Choosing the wrong location anywhere, let alone Dubai, is practically a disaster. While Dubai's real estate market looks unstoppable today, always remember no market is crash-proof. So after studying all these parameters, if you fully understand the risks, choose the right location, and have the capital to invest wisely, Dubai can be an absolute gold mine for you. But if you're not careful, this same gold mine could turn into a financial trap. This is what my study says about the real estate market in Dubai. Now tell me in the comments what extra information you learned about Dubai's real estate market. And if you've ever spoken to a real estate agent in Dubai, what did they tell you and what did they hide from you? Let me know in the comments. That's all from my side for today. If you learned something valuable, please make sure to hit the like button to make Dubai Curious happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I'll see you in the next one. Bye-bye.